The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. How's everyone doing out there today? Good turnaround Tuesday to you. Still looking for a possible candidate. Leaning towards it might be the metals for a continuation pullback. How's everyone doing today? Tom, Ziggy, everyone. All right, so I thought I'd start off with the euro. Told some people to try it down here at 52, out at 1390. I really think that you can box this range right now between 13 and a half and 14. Back over 14, I think we're going to challenge the breakout and this time breakout. And back under 1350, I think we're going to try the triangle down here. So my trader intuition tells me it's going to be to the downside because knowing how big traders operate, big funds, and all of that, it's really hard for me to believe that they're not going to drive this market up to new highs so they could shake out every last dollar bear and get short at better levels. So I think into the end of the year, this is a pretty high percentage. And what would negate that scenario, you always have to look at it, is back under 96.40. Blake has shown the uptrend line there. Pretty important level. Look at this moving average that it came off of yesterday. So underneath yesterday's low, the picture changes. 94.5 is in the cards. Everyone with me? You're welcome, Bob. Just give me a why if you kind of understand the analysis and what I'm thinking. I really think there's got to be at least a stop hunt above these highs into the end of the year. But back under yesterday's low changed the picture. Okay. So I really think this is really the crux of everything else that's going to happen is with the dollar, cable getting some relief today. Gold may be in a corrective pattern to the downside. Even though the yen is down today, I would welcome even further weakness back down towards 1280, 1260 in that range to look for an entry. Worked the short side last week, said don't short it, but that didn't mean I bought it. So kind of proved itself to me yesterday. And this is really what I think is going to be the magnet off the weekly chart for US dollar yen is shake out everyone, possibly get a 3 drive 1, 2, 3 up towards 116. Everyone with me on that? So, if the yen was going to crack, it would have cracked with the crash we had in equities last week and the huge bond rally that we had last week, and it just didn't crack. So you could see no follow through. I mean, all it's been doing is moving sideways. So just like the dollar, why not shake out every last US dollar yen bear, with some more dollar strength into the end of the year. And I think that could take it up there. So those are my two looks on the currencies. Also, even though gold may not have reached its objective, it's a lot weaker than silver, so, we'll have to keep an eye on the gold silver ratio. Maybe we're getting close to confirming it, but why not ABC as the dollar rallies back towards 1235 as a possibility. So before I hand it over to Blake, I have one more recommendation. And that recommendation is spend $1 if you haven't tried our service yet. I don't have to sell it. You just need to see it. So pretend you're getting a deal on a cup of coffee for $1, and then you'll know in 10 days. Okay, I think you'll know in 10 days that you could immerse yourself in what we have going on here. The dashboard, the private member chat, all the analysis, 5 different methods of analysis. So I really don't even have to talk about it. All you have to do is look at it. So spend that $1 for a cup of coffee and wake up, just like a cup of coffee wakes you up in the morning. Wake up to what you're missing. Just seeing the tip of the iceberg on face. So everyone think that's reasonable? I mean, what's $1 nowadays? You can't even buy a cup of coffee. But you might know where to get long and get short, all the different instruments that we cover every day. Is Paulie in the house? I don't know if he's here or not.
I'm not sure either.
Okay, well, Blake, I'll just.
I was going to say, can you hold the fort for 2 more minutes?
Oh yeah, buddy.
Thanks.
Your time. Take your time.
I'll be right back.
Okay. So,
hey, Paul is here. Actually, he just wrote on the chat box, so maybe we can make him the presenter.
I'm going to do that. Okay.
Okay. Good morning, by the way.
Hey, how are you, Stel?
I'm very well, thank you.
So you're excited about they're going to have to raise rates in cable? I heard you say, because they had a nice number.
It's interesting because earnings numbers came in today, 3.3% year on year. Inflation is at 3%. These are numbers where rates need to be higher. That's a given. And the only reason they're not higher is because of the Brexit mess. Yes.
Right.
And we have to remember also what Carney said. The Uber dove Carney a couple of weeks back. He said that on the case of a no-deal Brexit, sterling will probably depreciate, and as a result, the Bank of England will probably have to hike rates
to stop capital outflows.
Yeah. So the way I think about it is, if that happens, obviously sterling depreciates, but then rates have to start going up. If there is a deal of some sort, then again rates have to go up. So maybe the trade is to be short 10-year gilts. I don't know. It's a tricky one.
Yeah, are those gilts or that's 30-year paper in the UK? The gilts.
No, gilts can be. You have 10-year gilts. You have 30-year gilts. Yeah. But
I knew some guy. I knew some guy in a trading room in the UK would know the answer to that question. So I think. Oh, that's Blake's screen.
Paulie, I took the screen over. So
okay, because Paulie's here. I was giving him the.
Oh, he is. Where is he?
He's registered as an attendee.
Oh,
yeah.
So you can hand it off.
Organizer. He has an organizer account as well.
Yeah, but today isn't he an attendee? He's just he's just an everyman.
Incognito.
Yeah, I don't see him. Anyway,
he's a panelist now. You've made him a panelist, so he should be able to talk.
Hey, Paulie, are you there? Unmute your mic, maybe.
Yeah, I mean, we can't hear him, but I see him. Weird.
Hold on. Paul Frank. Yeah, his mic is on.
Yeah, his mic's green.
Yeah. Okay.
All right. Well, that's all right. Anyway, thanks for holding down the fort, and when we can get Paulie on,
okay,
we'll bring him on. How are you guys doing today?
Good to be in a fort that's not the Alamo.
That's a positive.
Yeah.
He knows what he's talking about. He's actually been in the Alamo back in the day.
Yeah.
I've been in and out of the Alamo. I actually live in an area called Alamo, so it's very close.
Wow. It's not a Greek word, though. Isn't it Spanish? That's interesting.
No. It's anyways. Yeah.
Oh, okay.
So I'm a little bummed out about risk. Well, the way the FX market's responding today to risk on. It's this was a really telltale. I'm going to go back to the S&P and just show you the hammer candle, and if you use ForexAnalytix. If you go over to the S&P, where it is, okay, like the basic technical analysis, the S&P seems as it may be range bound between the 2600 and 2816 level. and near term is the recent low may have been a false breakdown with the divergent RSI as well. So this is analysis from last night.
Nice.
Strength is diverging, and then you can complement that with the candle pattern. The S&P put in a hammer candle, which is a bullish sign. So we all knew that the S&P would be up today. I mean, that's not a surprise. What's more of a bummer to me is that the euro yen just hasn't. Not just the euro yen, it's the dollar yen too. I expected the dollar yen to be up towards 113.50, and Dale made a really good point yesterday when we were down here. That the dollar yen has been holding up very well. It ripped all day yesterday. It just rallied pretty aggressively. So great call, Dale. As we've just been holding this trend line. So
yeah.
It just hasn't backed off. But what I'm a little bummed out about is that we had this, rally in risk overnight, and here we are with the dollar yen, which is just marginally higher. And like I got long the euro yen last night at 128.61. Like my cost average was right here, and like back here though. I bought it back here in Asian trade, and it it didn't really go anywhere. I mean, I sold it this morning. I sold it at let's see, I exited it at 128.89 and 9/10 of a pip. So basically 128.90. So I sold it when it was up here, and I told everybody in the chat room I'm just taking my profits, because it looked like the S&P might have peaked, at least coming into the North American session. And here we are with the euro yen. It's off. It's off about 15 pips, and it's just it's kind of lackluster.
Another false breakout, huh? I mean, they're everywhere every day, Blake.
Yeah, I mean okay. So I was chatting with the guys in the office over at Gelos, and they're just like, we got options, huge options expiring here and there, and basically just trapping the market. And the problem with that is that options are so cheap to buy almost universally, no matter where you're trapping volatility, and it's keeping the FX market benign. And I was expressing my irritation over, which you guys already know because I even talked about it yesterday. October, November, December are usually my months where I do well, typically because of FX volatility. I can navigate in and out of the markets really well. The volatility is what helps me and you as a trader, helps us really do well. And the lack of FX volatility that we've seen has been very discouraging for me for the last couple months. And, because all the volatility has been in the S&P and bonds, and we've seen, massive moves in equities, but all the volatility is zapped out of the currency market for now. Now, you guys know that this will change. This is not a forever thing. Whenever I get, bummed out about the stock market volatility, all of a sudden, volatility will pick up. And same thing with FX. I mean, right now I'm a little discouraged with what we're seeing in the currency market, but it will change. It may not change this month. Maybe it does. Maybe we have to wait for the ECB on Thursday or FOMC next Wednesday, I believe. But whatever the reason right now is, FX volatility is very, very low, and it really is. It sucks. It does. It's horrible. I'm hoping that we see something pick up soon. And I was really hoping it was going to be today with another Brexit vote, or with the Brexit Parliament vote, and obviously that's been postponed until January at some point. Somebody in the UK would know what the date is, but all I know is it's not now, and that really bums me out, because I was really expecting today to give us that shot of volatility is what I was thinking. So I'm gonna go over just a couple of things before I turn it over to my colleagues. And Paul, did Paul ever jump in? Paul, I can't hear him. His mic is still.
I think he mentioned he had a problem with his PC and he might join tomorrow.
Oh, okay.
That's what he said.
Oh, okay. Yeah. All right. I haven't seen any of the comments. That's fine. And we'll bring Paul Franco in because he does the European crossover, which is just before the face webinar, which we just started 15 minutes ago. But I'm not gonna break the news to everybody, but I'm gonna give you guys a little bit of a warning, a good warning, that the European crossover webinar time will slightly change, and it's and we'll talk more about that when Paul can announce that. It's a really exciting change, I think, for those of us that get up extremely early, like myself, or for you Europeans, you're really going to enjoy it. So, and one of the things that we talked during our meeting, our ForexAnalytix team meeting yesterday, is how to enhance the customer experience, the user experience, if you will, with our webinars. And because that's imperative to us, is making sure you have a good experience with this community, but have great tools and a great community in general, with other traders. So we're always talking about, like, how can we improve things? How can we make things better? And it's not a for our users, it's not like, oh, it's going to cost you more. It's no, how can we tweak things and make things better for you guys? And we're always trying to think about that. Anyway, let me go over a couple of the market just kind of setup. So as far as the euro dollar goes, that move above 114.20 yesterday, it was a false breakout. It's yet to be seen if we're going to get a follow through to the downside. Typically, I would say yes, but based on the ECB meeting on Thursday and like I said, the FOMC next Wednesday, we're probably just going to have to wait to see what transpires with the ECB meeting, at least first, because we're already bouncing back towards 114 now. Dale, I didn't catch everything because I was to and from my office, but you think that the euro is going to break lower and the dollar is going to be stronger, correct?
Oh, I'd like to see 1350 taken out. It looks like a nice little bracket, that 114 and 13.5. And it's because of the dollar, Blake. I mean, it's hard for me to believe that they're going to leave the highs and all the dollar bears stops above the high aren't going to be elected, because I mean that would shake out a lot of dollar bears, and that would give people even better levels. I mean, maybe even 99 in the dollar index, but it all changes back under 96.40.
Well, and I think we could probably agree that at this point in time, the dollar is, as far as the dollar index goes, the one piece of unfinished business that I see is the 98 level, which is the 618 retracement, and that would do it. And that would do it. And you'll hear that these triangle patterns in a trend like that you're seeing here are terminal, which could very well be a move to 98 and then a reversal. It could very easily happen, and I don't second guess that at this point. I don't necessarily want to be long dollars. I'm a little nervous about this really big, the divergence that you see here in relative strength really concerns me. But at the same, I don't think Paul Franco.
Oh, and I don't think that would blow out the divergence if it just went to 98.
No, it would still be divergent. Hey, Paulie.
Hey, Paulie.
I was watch the Face webinar on my MacBook, but as I was logged in on there, and that's why I couldn't take over the screen. But I logged back in under my main system. So, but you were talking about the European crossover webinar, and starting Monday, we're going to go in and start that at 4 a.m. Eastern time. So that would really cater more to our European audience.
So that's really exciting news. If you guys are now, real quick, how many of you guys? And I'm looking at the Q&A panel right now, so you can chat with us at on the Q&A panel. How many of you guys are in Europe and think that those hours are going to work better for you? So that means that it's at 4 a.m. Eastern time, which would be
3 a.m. Central Time.
Yeah, for me, it's 2 o'clock in the morning, which is way too early. But it's 6 a.m. Eastern. What do you guys think?
4 a.m. Eastern. 4 a.m. Eastern.
Okay,
That's
so
9 in the morning GMT, by the way. And
okay, I was just going to say, what is that GMT wise? I was going to pull that up.
Yeah. And let me add to that people that were watching Paulie's webinar at the current time will still have the ability to watch it at the same time. Because we will be giving out the link to the recording, immediately as the webinar is over for our only subscribers to be able to watch. So
pretty good response. Pretty good response from the attendees. That it will help them a lot. Even someone in Australia, Blake, because it's like 10 o'clock at night before now. That they could see Paulie while they're eating dinner.
Hold on really quick. Let me grab something really fast. If you have no sound,
oh yeah,
it is definitely.
I was almost going to tell him to log out, but he can't hear me.
The rest of our listeners, and here.
So, Paulie, what great team spirit to get up that early to serve our subscribers.
Well, I think it adds more value for those listeners that we talked about that in the meeting. By the time we get into the webinars, they're basically getting numbers after lunchtime, and that may not do them that much good. They'd rather be, if they're able to get it much earlier and have an opportunity to go in and react on what we're looking at for the day ahead.
Cool, buddy. And I've always believed a lot of the major reversals happen in the European session, and I know a lot of people that moved from wherever they were so they could trade Europe.
I know Blake used to talk about that. If he had one place he could be, he'd like to trade or move to a place where he would trade during the European session because of all the opportunities.
Right.
And so we got a lot of great comments from the European community. So it's going to be I think it's going to be a great thing for all of you guys in Europe. So just remember, it's going to be 9 a.m. UK time. So that's 9 a.m. Well, it's GMT, right? The GMT, is that London right now? I never know.
Right now, yes. Right now it
is. Not. I know it changes, but right now it is. Okay, so 9
if it
a.m.
was summertime.
Does GMT stand for good money time?
Yeah, it did. Maybe it does for Paulie's webinar. That's for sure.
Anyway,
absolutely. So great news. Thank you, Paulie, for chiming in. And by the way, before I go and turn everything over to Steve and Stelios and Coach, Paulie, anything that jumped out at you today on your radar that you're seeing?
The one thing that we've talked about, and if I were to take over the screen, has been the resilience of gold. It just won't back down. If you want me to show you on the screen, it's held up very well. And I thought yesterday we actually had support at 1245, and I thought it may make it down there. It made it to about 1247. But if you look on the exponential moving averages, it's been steady the whole way like a rock. And maybe once we get past it, it looks like this thing, at least on the daily when we did the Asian analysis, we were looking for 1260, and we were looking for 1254 on Friday. We got that at the close, but this thing doesn't look like it wants to slow down to maybe we get up to about 1273. 1268 is 58% of the entire range of 1167 to 1369, but that's the one market that's been truly relentless. It just doesn't want to. It doesn't even want to dip. I mean, even if we were to see a pullback, I think people would use this as an opportunity just to step in and jump in and take advantage of this move.
And the market's pretty short. Gold, it's one of the largest short positions I think on record in gold. At least it was. And so to see it squeeze a little bit doesn't surprise me. And this is the one thing that really prevents me from being too bullish the dollar at the moment, is that gold looks bullish. I mean, we're within a striking distance of the 200-day moving average. And gold looks like it wants to power higher. So great point, Paulie. And just so you guys all know, it actually broke out of the highs here. It back tested the highs at 1242, and it already bounced back to 1248. So now we're just consolidating above the highs, which looks pretty bullish at the moment. So
yeah, and guys, it's interesting because most people, because they might be dollar bullish, couldn't understand the rally the whole way up, that gold can go up with a steady to stronger dollar. So, it's kind of a new thing for a lot of people because they think you need a weak dollar for this to happen.
There is definitely an inverse relationship between dollar and gold, but you can, and typically in more periods of risk aversion, but we can see gold and the dollar move higher together. It's not impossible. But we'll see. But I'm going to pass it over to you guys. We have producer prices coming out in a few minutes. Just remember, we are trapped in ranges. Almost, I mean, look at the dollar yen. We are smack dab in the middle of this triangle right now. Euro, almost in the middle of the triangle. Not a whole lot to do. Be really careful getting too aggressive here. The cable's still in breakdown territory despite the bounce overnight. We're still below this 126.60. And I think while below 126.60, you got to keep in mind that it is broken down and we're holding the breakdown spot. So just be careful if you're trying to get long the cable down here. It's still in bearish territory. Anyway, I'm going to pass it over to Steve and Stelios and Paul. Thanks for jumping in, Coach. Sure. Thank you very much. And Paulie, I know everybody's excited for your new time. So with that being said, Steve, here you go. There's the screen. You guys have a great trading session, and don't forget to talk about Forest Park FX.
Okay, Blake. GL,
thanks,
buddy.
Guys. Thanks. Good luck. Bye-bye.
Bye-bye, mate.
Hi, Steve.
Hey, Coach. What's up?
Nice call on U.S. dollar Mexican yesterday. You said it could be vulnerable. And it's holding right on like a, 200-day or something like that. It looks like it could break down. If the dollar
it is looking vulnerable. It is looking vulnerable. I mean, momentum has clearly waned, and I think we might see, an acceleration to this move lower. But as Blake said earlier, we have a market that the vast majority, not all, but the vast majority of FX related tickers are range bound. I mean, we have contracting ranges, we have contracting volatility, and obviously it's not the ideal conditions to be taking positions. But it is what it is, and you have to be patient and wait for some either look for some markets that do actually move, or be more patient, because otherwise you are in danger of getting chopped up. Now, I think that having to do with, by the way, Andre is going to be with us because I know that he has some setups, from a harmonic perspective that he wants to share. So I'm going to briefly go over a few things because it's not that much has changed since yesterday. One of the things that obviously has changed since yesterday is that we've had a rebound in risk. Yesterday's reversal, as Blake already mentioned, was quite a decent one. I wrote in the chat room very early on the day when we were trading at around 26.20 before we plunged lower, that liquidity at that moment seemed to be very, very thin, and it looked like the S&P would collapse lower, which it actually did, like in the following 1 hour. But then, as it seems, people started stepping in the market, and they closed the market positive, which definitely is a first milestone for the bulls to to achieve. Now, the DAX is also showing as a nice attempt of a recovery, and actually, if we go down to a 4-hour chart, I think the DAX looks quite interesting because this can be a descending wedge as well. So I'm looking at this for a potential rebound. Obviously, 11,050, which is the descending triangles support, is going to be a strong level of resistance. So I want to see what's going to happen from there. But I know that Ures also mentioned that in the chat room that we have some chatter that the Chinese are going to launch some kind of a stimulus package. So that definitely, if confirmed, might lead to some kind of a late Santa Claus relief rally for the markets. Regardless, to be honest, my plan hasn't changed. I mean, I would still be looking to sell any real strength later on in stocks. But, this might go on for a few more days. Now, having to do with the cable, cable obviously remains bearish as long as we trade below the breakdown level of 127. So I think that, looking for a reversal, jumping the gun is probably not a good idea. At least, I believe it's quite dangerous. And now, a couple of pairs I also wanted to show is USD NOK and USD SEK. The reason is because I see a lot of people trying to short them, but I have to say that we still don't have an indication that something is changing. I mean, USD CAD had a very nice rebound yesterday. So far, it's stalling once again at the 78.6. We do see some RSI divergence, but we don't yet have a confirmation of a breakdown. So I would be, quite careful with this one. And if we go down to the 4-hour chart, we can see that USD NOK also, has two potential interpretations. One of them can be a head and shoulders formation, in which case we might see, a resumption lower. But you have to keep in mind that the vast majority of potential head and shoulders formations end up being triangles, and triangles are continuation formations, right? That is one of the main reasons why theory always says that you should be very careful with head and shoulders formation and only treat them as such once you get a breakdown from the neckline. Because in this case, for example, a breakdown of the neckline will at the same time invalidate the potential that this is a triangle, right? So I can't blame anybody for wanting to have a bearish outlook in USD NOK in the short term. I mean, it is a potential resolution of this recent consolidation. But if you want to do something like that, you need to keep in mind that there is also the potential that this is a triangle, which means that we're going to have one more thrust higher towards 870. In my opinion, if we go to the daily chart, you can also see here why. There it is. As you see, there is some confluence of resistances at 870. So this is one potential resolution, and at the same time, keep in mind that we have broken out of a very, very large descending channel. I mean, it's been going on for like more than a year. So the fact that we came down, we retested it a couple of times, and both of these times it held. And actually, yesterday we had an outside reversal day. That tells me that we should be rather careful in trying to bottom pick this market. And as you mentioned, Coach, earlier, USD yen can also be in a triangle, and DXY can also be in a triangle, which means that one more push higher towards 98 confluence of resistances, but even almost 99, because that's another confluence of resistances, can possibly happen. And to be honest, since I see a lot of people that are trying to fade dollar strength, I believe that potentially the pain trade here would be for another push higher in the dollar before lower. Regardless, as we said initially, volatility has been contracting in FX. There is a chance, since we're headed to the middle of December, there is a chance that if we don't see some kind of a breakout from these ranges within the next, I would say within this week, actually, there is a chance that we're going to go towards the end of the year without getting much, because then, liquidity is going to start drying out. Traders are going to start going on for, vacations, holidays, etc. So, I think this week is going to be quite important. Perhaps the ECB, will give us something, but if we don't get something this week, I think that we would have to remain patient for perhaps until the beginning of the new year. So if you want to start finding trades that look more interesting, I think you have to go outside the range of the popular currencies, some of the exotics. Crude, by the way, I see a lot of people being pessimistic about crude, that it's breaking down. I think that there is still the potential that crude is going to push higher once more, towards this, at least this 55 to 55, 30 range before we see lower prices. So, I'm viewing this as a potential development in the crude market, and then perhaps we're going to find like a medium-term low, and see like a bigger correction beginning from there. Now, an update on the gold-silver ratio. The gold-silver ratio seems, after a little consolidation, seems to be pushing decisively lower once again today. And, we are getting very close to a breakdown from this ascending wedge. So I do think that, this might prove, a break below 84.65, I think is probably going to produce some follow through. Now, before I pass it to Andre, I wanted to point to a couple of things that are quite interesting. That's why I left them for last. One of them is the fact that the yields perfectly tagged this confluence of supports yesterday before rebounding higher. Now, the 281.5 is the measured target of this double top formation that we measured once we got a confirmed breakdown, right? So, that is the target of the double top, which we tagged literally to the PP yesterday. And, this, and then, earlier today, very early today, European hours, I realized that, this previous triangle line looks like, if I extended that, it might be somewhere there. And I actually extended it, and it was exactly there. So as it seems now, we found support in the yields at this nice area of a double confluence. You can even call it a triple confluence if you want, because if you want to also create like a little horizontal support area, as you see, that also coincides with this consolidation lows that we had here and here. So quite an interesting area. And at the same time, that's why sometimes it's much cleaner at looking at the yields, because at the same time, if we go to the ZN, which is the 10 here, you'll see that we had a false break higher yesterday here from the previous high, and we seem to be rolling over from here. So I do think that there is a potential for at the very least, a pullback. So if we are to move higher, we should at least pull back to retest this broken trend line resistance as support and this broken horizontal support resistance area this time as support. And if we do break back below that, perhaps that will signify that this reaction higher constituted the end of some kind of reaction. Although the fact that we saw a daily RSI almost at 80 initially would have me being quite cautious in seeing if we're going to find a low here, because you can call this a confirmed high in a sense. So I would be closely looking at this 119.75 roughly area to perhaps see another reaction higher.
Concur, buddy.
$80. I think that that's going to be a major breakout for silver, and that might then get this. By the way, since we last saw this, the gold-silver ratio has moved even lower, and as you see, it's currently testing this ascending trend line support. So I do think that that can prove to be quite an interesting trade. I think I'm going to start scaling in to that. I've already explained how you can do that. I mean, you can synthetically create a long silver, short gold trade by buying silver, and selling the exact same dollar amount of gold. This way, you create a synthetic long silver, short gold trade, because I know that the vast majority of the brokers will not offer something like that, straightforward. Okay, so let me pass it to Andre, because I know he has some things to show us, which is very welcome, since we all know that not many things are moving, but from the eyes of harmonics, we might have something that we haven't seen yet. Andre, I just made you the presenter.
Hello, Steve.
Hey, mate.
Thank you. Technical issues. Hello, Dale. How are you?
Good, buddy.
Okay, so yeah, I have a few things actually, as Blake and you are saying. So the market is a little bit moving like a sideways process, printing sideways process. But we have a few levels that I believe we should take some attention. Let me just close those. Okay. This is cable. Let me jump into a daily time frame. I published this chart yesterday, I believe. Let me just adjust those. Okay. So I still believe there's room below those previous support levels for cable. And the first pattern that I will search for price reaction is this blue, the crab pattern at 1/600 extension, 1.24. So this is the level for the first pattern approaching or close to the most recent price. Is this bullish crab pattern, and this is 124.
34 is also the 78.6
retracement.
Yes, of the post-Brexit low to the highs. So I agree with you. I mean, around the area of 1 looks like a good area.
Can I verify that level with you, Steve? Can you?
Absolutely.
Let me, because I have the 78% retracement here. I'm not sure if I'm checking that chart.
Probably.
That will depend on our provider.
Something. Yeah, that's something that you're right about. The post-Brexit move lower. Not all. Are you sure you have it? Because not all brokers have the same low, because that was a spike lower. Yeah. So to be honest, there are differences between brokers on where that low was, because for some of them it traded lower, like momentarily. I mean, there was a transaction happening there or whatever, and for some others, so at FXCM that I'm looking at the moment, that 78.6 was at 124.30 something. As it seems for Rwanda, it traded lower, so the 78.6% is lower, and for you that coincides with 161.8. Yeah,
161.8, and we have also the golden ratio as potential targets for the pattern. So what I mean is, if the pattern gets completed, we have the targets for that pattern synced with the most recent support levels, which makes sense, because usually when the market decides to violate this previous structure support later tends to retest that level. So what I see here is a potential confluence between Fibonacci levels and the formation of these like a brown or a golden crab pattern extended to the 168 extension, which can print a deeper or let's say a stronger movement, retesting the previous structure. It at least makes sense, not because of 78% retracement, because it means nothing in relationship with those advanced pattern formations. So I'm not expecting the 78% retracement at confluence with the 1618 extension to form this pattern. So this pattern will form if the pattern achieves the 1618 extension only. And it requires a bounce from these levels, and it does not require also, let's say, extended stop losses, because usually if the market starts to bounce from that level, the pattern will start to work.
Understandable.
Yeah.
So more weakness initially in cable, which indeed looks very likely after breaking down below 127, and then a rebound.
Eventually a bounce, eventual bounce from that level.
The first area of support you're looking for is 124, and then you're looking for
122.
122. Okay, good. What else are you looking for as a potential good opportunity?
A potential good opportunity. We have DAX has completed on a daily, actually almost on a weekly time frame. I can try to show you this on
the DAX. You said
the DAX.
Oh yeah, that's nice, because I was showing it earlier. I mean, it looks like in the 4-hour chart we have a descending wedge, which is a first reversal signal. And as you see there, we also had like this very, very nice hammer. You can find it both on the hourly, 2-hour, and 4-hour chart. You can see it very clearly that nice spike lower. So you believe that this is like some kind of a tradable low now that we might have got?
Well, the pattern I never know that. That is the 1 million question.
Of course, I mean,
Steve,
I'm not
I
saying
know about
you know.
that. What I know,
I had a hammer. I'd hammer in the morning. I'd hammer in the evening. All over this land.
Dale, as every time we discuss something like this, Dale has
he has a song. Yeah, he has a song.
And that's awesome. You know why? Because that's one way for people to remember those small notes that we provide to people. It's very interesting.
Yeah, remember the hammer.
Remember the hammer. Yeah, and trade with low leverage.
By the way, sorry to spoil it for you, but this is not a hammer. Because for you to have a pin bar, hammer is one of the 4 possible pin bars. You need the body of the pin bar to be at least 2 times, or ideally 3 times at least, smaller as a percentage than the wick. So this is a bullish candle, but what we're seeing right now is not a hammer.
Okay.
Go ahead.
Okay. So you mean it would need more upside, Steve? This is
no. It would need less of a body.
I see.
The wick to be a bigger portion of the total. But this is a bullish candle regardless.
Less of a body like mine is now. All right, I got it. I won't forget that one. All right.
What I see here, Steve and Dale, just to finish with DAX, it's a crab pattern. It's printed at 1618 extension and below the most recent support level. So I believe printed also at oversold conditions. And I believe there's also a possibility for a bounce from here. I'm not sure if that bounce will print or will search for the resistance, the previous weekly resistance or the previous monthly resistance above. I'm not sure about that, but the pattern is printed, and it's possible that pattern starts to search for the previous structure pressure levels, and those are indicated in these charts.
I'm on board with you, but I think that we first need to clear what you've marked there as a very nice support area, roughly at 11,000,
Oh yes,
11,050.
of course.
This is the first area we're going to have to clear to confirm that some kind of a bigger.
For more conservative traders and for those who are not trading harmonics, because if you are trading harmonics, you want to take advantage from the very bottom of that pattern and the point where the pattern is created, is forged. In order to try to take advantage from the risk reward that the pattern offers you. Because if I'm trading the breakout, I need to wait for the breakout and the retest of that structure. I will lose for my risk. So I lose points for my risk. I need to increase eventually. I still need to position my stops below the previous structure support if I wait for the breakout of this.
So you reduce your risk reward ratio. You're absolutely right about that.
Yeah, I lose risk-reward ratio, and what's the objective to trade harmonics is exactly that, to try to take advantage and anticipating a structure breakout. Okay,
catching falling knives.
It's similar. It's similar like that. But if you repeat that process over and over again for the next 500 trades, respecting your criteria of risk, I believe, that talks by itself. Any type of strategy that you respect, that you can trade and you respect the risk strategy.
I totally agree with you. And in general, people should realize that there is nothing that comes free. That the same applies to trading, which means what Andre just said is the following: if you want to catch, almost the very low or the very high of a move, you're obviously reducing the possibility that you're right, but you're increasing substantially your potential reward by limiting also your risk to the minimum. If you're willing to do that, you need to realize that you should be fine with being wrong even more times than you're right. But it doesn't matter, because if you're always going like for risk reward ratios of 5-to-1, 6-to-1, 7-to-1, and you're wrong 60% of the time, 65% of the times, you're still going to make very good money. So, if you are okay with being wrong more times than right, but making money when you're right a lot more, that will, also cover your losses and produce a profit, harmonics is a great method of timing reversals. So this is exactly what this is supposed to do.
And Steve, I don't know the name of the person, but I believe we can find reference in the internet. Mark Douglas had a friend inside the pits, I believe, failing between 90 and 99% of the times he engaged the market. So the man was every time the man trades something, the trade didn't enter. So, but the 1% of those trades when entered, they call it monster trades, because that man, every time he engaged the market, to trade a huge position. So he lose a penny he lose a minimum multiple times. But it produces monster trades. I'm not saying that is the best or the correct way to trade. Actually, who am I to tell anyone which is the best methodology?
Great book called Trading in the Zone.
Yeah,
that's it.
I'm not sure if I read that on that book, Dale. I'm not sure on that, but there's also good reference on that book for sure for Mark Douglas. And Mark Douglas is one of my favorite writers inside the market.
Yeah, you have
I see
picture on the wall.
Not a picture on the wall, but but actually, but it has changed my perspective, some of my perspectives inside the market. It allows me to think a little bit different, and obviously with experience and being surrounded with what I consider good sources of information, similar as we have here inside this community, this family in ForexAnalytix. So if you are as you remember yesterday, so if you are surrounded with good traders and awesome persons, you become also and you start to move forward. No, you start to develop your own strategies to trade, specifically to trade the markets, and being better person also. So being surrounded with better persons or good persons, it allows us also to keep moving forward. Let me. Do you have an interview today, Dale? Let me just finish with this dollar versus CHF. This is a very interesting chart that we are following from. And let me show our subscribers. My browser is a little bit.
I closed yesterday. I had a slow pattern, a short pattern playing. They use the Swiss. I closed it yesterday in profit because I don't like the hammer in essence that we left behind. And as it seems today, today we're creating a second consecutive one here. So. I think that this might be the end of a corrective move lower. So I was looking to catch the second leg lower, and I think it might be near completion.
Yeah. How about new highs in Dixie, and the Swiss doesn't? U.S. dollar Swiss fails to make a new high. What a setup that would be.
That would be a nice divergence, but we would also need to get some risk off.
Yeah.
To help.
Well, there's a nice support there for sure. I just want to share this sequence of daily charts that we had on CHF because they are amazing in terms of patterns, and to let to finish and give our subscribers and our listeners one small approach on how to trade how to trade the markets. Actually, everyone is trading a pattern. Though that CAD versus yen that Blake has entered a few days ago in a long, Blake was trading a shark pattern exactly at the 161.8 extension. I will show you that. I can show you that in a second. But this is the sequence that we have that we are following on CHF. So we have this head and shoulder formation. It's a pattern. It's a potential reversal behavior, followed by the breakout of the structure. At that point, I was expecting the formation of this eventual shark at 161.8 extension. The market has also filled that criteria. Another pattern, bullish pattern forged. At this point, we expect the pattern to trade higher. The market has traded higher, and it has printed that pattern at 224 extension, extended a few points at 241, and we are now trading. We are now trading that bearish pattern and at targets. Actually, the market has already achieved the first target by default, and that's why the market is now feeling some pressure at that level. So I will not ignore a bounce from these levels, but obviously, if I'm trading advanced pattern formations, I will wait for the pattern to complete. As we can see, the market has violated the 38% retracement, 200 moving average approaching from below. Nice confluence between the two levels at 161.8 extension, two swings measured at 161.8 extension, and also the 50% retracement. So we have also a nice confluence between the Fibonacci levels and the price patterns the market can eventually print at that point. Obviously, this one can extend to the 224 extension, but we need to wait for that to validate that thought or that possibility. But this is the first level where I will start to look or to search for a bounce, and eventually the market will not fill that criteria. The market will fail those Fibonacci confluence, and will bounce from here. Actually, we are seeing, as Steve has mentioned before, we are now seeing those two hammer candles, and eventually there's a probability behind the formation of those candles to push the price above. And well, Dale, it's all yours. And thank you.
Okay, thank you, Andre.
Have a nice week.
You too.
You, Andre.
You too. Thank you.
I'm going to see if I could. Yep. So speaking of good traders and tacticians, Nargis, welcome to FACE. I've just passed you the controls. Looking forward to meeting you and talking to you, and here we go. I'm looking at your some type of menu. Okay, now I see nothing and still don't hear you.
Hey Dale, hi, good morning. This is Nargis here.
So nice to meet you, Nargis.
Hi, nice to meet you too.
I appreciate you coming in to talk to our community today. You know, I'm a believer, Nargis, that you know, there are so many great traders that may not be famous and may not have 50, 100,000 followers, but they're kind of like undiscovered gems. And I saw some of your charts on Twitter, and I said, you know, I have to get Nargis in here because she has some skills. So welcome to be a newly discovered talent by Dale Pinkert.
Thank you so much. Really, really honored to be, you know, amongst so much seasoned people, and I'm a little nervous. So, you know.
Well, you're going to be great. And you know what? It's always interesting to find out how someone ended up doing this. And maybe you could take us back to, you know, what you were doing before and what led you into trading and becoming a very good technician to be able to forecast prices. Can you take us back there to how it all began?
Yeah, sure, definitely. So, you know, I'm in Silicon Valley, and, you know, as you know, everyone here is like, you know, in the IT industry, you know, development and all that. So I was one of them. Working for, you know, eBay for 8.5 years, and, you know, going through all the Silicon Valley stuff. And I kept going and went to my desired positions and all, but I always thought something is missing. I was not happy with all my progress. And I used to trouble my husband a lot. I don't want to work. I don't want to work. And he said, you know what, just give it up and do something what you like. So the opportunity came when my second one was born, and I took a break. And I was always doing stocks, and in my head I could see what I'm doing, but I couldn't nail it exactly why would I pick a stock, and, you know, what did I see? So then during that break, I started going into much deeper, and some of my friends at work had introduced me to technical analysis. They were using the moving average. Oh, it's here, it's there. You know, it crossed about 200 SMA and all that. So, you know, a few years ago, I got introduced to that. And so during this break, I went deep into it. And my God, did I go? It was so interesting. I am not a morning person. I cannot get up in the morning. But for this, rain or shine, fever or no, I get up every day at, you know, 4:35, and I'm like, chart. Weekends, I don't do well. On weekends, I get bored because I don't see a chart. The market is not there. The pressure is not there. So I'm like, okay. So that's how I got into it. And then I started discovering, and then I got introduced to Twitter. And then, okay, you know, I was doing Fibonacci after some point, all this moving. So I think my husband tells me that I have a good observation power, you know. So he's,
okay.
So then I said, okay, why? Let's put to use what I see. So, you know, I go from 5-minute charts to the monthly charts. So the bigger picture should always there. And then, you know, start finding patterns. I think, you know, once you look at a chart, immediately, if you don't see a pattern or the price is happening, then, you know, it's so I guess I've come to that. And every day, every morning, I'm excited to go, you know, come to work.
Yeah, it gets in your blood, right? And you love it. You know, I tell people, you know, don't trade just for the money. You have to love it. Or it'd be, you know, kind of a miserable existence that if you're only happy when things are working out, because it's never always that way. And wow, what a supportive spouse you had to.
Oh, yeah, the morning side.
You know, wow, you know, that's your best long-term trade, Nargis.
Yes, that's one of the good investments I've done.
What pattern did you see there? No, I'm just kidding. But so, you know, it's a work in progress. Would you say you're mainly self-taught, or were there any people that maybe you met on Twitter, or books you read, or courses you took that were an important influence in your trading?
Yes. It was mostly self-taught. taught, but that drive at least got me in touch with a couple of good people. Like I said, in my work, there was one guy who was good at technical or at least some stuff. So I learned a few stuff from there. And then, at least seeing the price, how it is, why it is the bullish trend, the bearish trend, how to recognize stuff. And I still stick by that. And I got a couple of, in the trading community, I found a couple of good people. I exchanged my thoughts with them, and I got a good mentor actually. So the newer progress I'm having is due to that actually. The new stuff I've gone into.
Do you want to name that person?
Yes, I have Sashi Narayan. He's a very good trader and analyst.
Okay.
Very good market research. He's becoming a GAN expert. So,
okay.
we're all rubbing up GAN.
You're learning GAN now too.
Yes, yes. So the newer level, the newer level.
You're going to add the time element to your patterns now. So,
yes.
Right. All right.
Yes.
So, what a very interesting story, and in your voice, I feel the passion that you have for trading, and I'm a pretty big fan of RSI. So I'm looking at your setup here.
Yes.
And I see that you actually even draw channel lines on there. So let me guess, your expectation now would be possibly for the RSI to climb back to retest that pink line.
Yes.
But if it breaks the blue line, all bets are off on the long side of S&Ps.
Yes. Yes.
All right. Do you use it for looking for divergences and confirmed highs? Tell me how you use RSI.
So RSI, the way I look at it is basically generally in this area, it's fine. The price is going fine. But one of the interesting thing I see is here, especially if it's on the daily, see this, anything above 85, that's that's like a red signal. Okay, be ready for just mother of the day red candle kind of a thing any day. So this was right here, and I think I may have a tweet there also saying that one of the interesting thing, Dale, I've noticed is if you go to the monthly chart, when it was a FOMO buying. Everyone was like, buying, and like, the S&P is going to 3,000 and this and that. Yeah. And I was at the complete time, I was tracking this. See, here
you saw the divergence. You saw the divergence at new highs.
Yes. And it was going to 87. And guess what? It was competing here with 1996 RSI. And every day I was tracking, okay, is it equal to that or did it come near it? The moment it surpassed this 87 by very little, the next day it toppled down.
Yeah.
The next day itself, I think it was Jan 26, Jan 27th.
And why, of all the different momentum indicators that you could use, did you select RSI?
Because RSI was, I was introduced to it, I think, very early. And that was one thing which talked to me, like many other. These MACD and stocks, they are just there because this trading view, I'm using for free and they're taking away all the indicators. So this chart, I don't want to disturb because for my daily trends, this is a clean chart. So I don't use MACD as much, but, these two things. The price is there for me. I know it's riding the 10 SMA. I am good. Below 10 SMA, that's a caution.
Right.
We not want to short it, but it's like the daily bull trend is like warning.
Okay.
For me. And the moment the price goes up, I know it's a bullish trend until this is. So even now, see. And the other thing which I look at is this is the 10 SMA and this is the price. It is too much extended from there. The more it goes down, the more distance it creates, the further rubber band pull it will get. So, it has to, for me, it has to decrease that distance. Up or down, doesn't matter. Up, here it went the other day, 3-4 days ago, too much distance. And then boom, down. And for same thing, I think, yes.
Is there any kind of like percentage above or below it that is kind of like a signal to you?
Yeah, I mean, on a daily, on a regular stuff. Not like these days where it's one day red, one day big green, one day big
Right.
double size red.
Very hard
On
to
an
position
average, it's
trade.
$5, 5 points, 5 to 6 points above is like, expect some kind of a pullback.
Okay. So let me ask you this. It's easy when things are working for you.
Yes.
I believe it's really kind of a one mistake business or a few big ones. How do you
Yes.
manage risk, Nargis?
I have to discipline myself a lot, and I think it's still a work in progress. Believe me,
Okay.
Because when you're in the thick of things, everything is rosy and hunky dory. But sometimes I still do make mistakes. So I have now trying to use all my technical analysis, this setups on 30 minutes. Okay, if it closes below this level, or these days it's like the GAN level. It closes below this, I'm out.
Okay.
Small loss or some loss, I'm absolutely fine with it. But save capital.
And you wait for end of day. You don't place stops in the market for algos to pick off. You kind of wait till the close.
No, not close. For me, 30-minute close is good enough.
Okay.
Yeah.
All right.
Because once that price has breached that, you know how it is. And plus, I'm sitting here watching it, so I know, okay, this is the momentum I can see it's changing. So
okay. So my adjustment to FX, being a commodity stock guy for the first part of my career, more years there than in FX. How do you manage yourself so that you're not at your trading platform and you can still have a life?
Yes.
So you don't ignore your wonderful husband who told you could quit your job and find something you love to do. So how do you manage that?
Yes. So actually, these days I'm trying to take some longer trades, which I can keep it, and I know, okay, this is how it is. So then, I take it and go, and I come and monitor. I do my stuff, do other chores, drop my kids to school, spend some time with them, and
you have charts on a phone? Do you use a phone app while you're driving the kids to school? I hope you don't trade when you drive.
No, definitely not. Yeah. So one of the things which I do is I put alerts at the important level where I'm expecting either it crosses up, then it's good for me, or it crosses down, then it's not good for me. So sometimes those alerts help me to know, okay, there is, change in what I was looking at. So if there is an action needed, then I do it. Otherwise, I'm fine. Sometimes I do adjustments.
Okay.
So.
All right. Well, I think it was an S&P tweet that caught my eye. What other instruments? And, I don't know what your philosophy is, but, I don't think you have to, trade 10, 15 different instruments. For me, that kind of scatters my focus. What other instruments do you pay attention to, or do you just scan a lot of different markets and just look for the best setup?
No, actually, these days I'm very happy with a few stocks, and S&P is my, the go-to market thing, my market health, basically.
Okay.
So, so I know where it is, that I know, okay, what the market is doing, and I sometimes trade futures. So I trade oil, ES, and RTY. Sometimes NQ is too fast, Okay. So I do that.
Yeah. You find a market that agrees with your personality, your trading personality. And the S&Ps are it for you.
Yeah. So S&P, yes, because it helps me to know where the market is at all times, and it's a good trading instrument as well. So, yeah.
Okay. So the S&Ps on your radar, are you position trading this, or are you in for the day, or scalping? It's a great trading scalping market, but very hard to be a position trader in this with all this, up 400, down 500, lack of follow through, or maybe you're just range trading it now between the blue lines. Is that what you're doing in here?
Yeah, so this is what I had marked, seeing that, okay, this is what it is doing these days. And we had come to the 786 retracement from the low of Feb 5 to the high of this.
Yeah.
And then this would be 100%. And it almost said that it wanted to do that, but it only came here. Now, people looking at it would think, okay, this is going there. But I was looking at YM, the Dow,
Okay.
because as I said, I was introduced to GAN, and these days I'm doing that. So I realized that, or rather, I was pointed out to that was that the Dow Jones hasn't done its cycles down, and that was pending.
I see. Okay, so you knew there was something incomplete, and that's why you waited for it.
Yes. So I knew that this going up will not go anywhere until that completes. And yesterday it came very close to that number, 23,700. It left 100 points actually. It did some 800 something yesterday. And from there, the moment it did that, since then we are getting this bounce. And this hit 25.83. And since then we're getting the bounce. And the another thing which I was waiting for was Apple. Apple to 165.5. It poked to the lower level of 163. So I bought Apple there, and I have SPY calls.
Okay.
So I knew this. So that was a good bet to say the moment it touches that, it could be a good long.
Okay, so you can also key your trading off a different instrument, waiting for Apple and the Dow to get to levels, and then you look at what your main instrument is, the S&Ps, and know if what was weak and leading it, once it got to those levels, to be alert for a turn. I really like that because I do that a lot with certain markets. I don't know where they're going to end up, but I have a conviction about what something else may do, and I just wait for that to happen, and then the whole picture clears up. So yeah, that's interesting. We're kindred spirits on that. So we use other markets for tells on the markets we trade.
Yeah. Otherwise, sometimes we may not figure out why it is happening, why it keeps falling, or why it keeps going up. So so
I know it's a tough call. Yeah, I know it's a tough call. What are your expectations now that we cleaned out all the stops under the October low, and we had, people would call this a stop hunt, false breakdown? What are your expectations from here? Just maybe a retrace of the recent drop, or can we break out above 28.10?
Yes. So for now, if you just take it one step at a time, I would just expect it to first test the 10 SMA, which is my thing. So anything above it, I would expect it to retest this. Okay. So this has hit this trend line 1, 2, 3 times. 4th time could be a charm. Who knows?
Right.
So either this way, or if it doesn't go this way, then back here and then here.
Okay. And you use these Ichimoku, I don't say it right. These clouds give you some guidance too?
Yeah, it gives me some guidance. Again, I said this trading view, I cannot move this chart because I would have to buy the service because they're taking.
You could remove the clouds, though. I think you can. Oh, that's right. You have to be a subscriber to change all this stuff. I get it. All right.
But what I've noticed with cloud is when I draw the fibs, right? The fibs and plan and the wave, they kind of merge into it. So I like it, actually. I've started liking it very much now.
Isn't that nice? Something you were stuck with is useful. So, and you know what? That's the first time, and I've interviewed almost 1,000 traders, educators, analysts. And it's the first time I've heard someone make that statement that a lot of fibs line up with cloud formations. So that's a pearl. And you just trade, you have no axe to grind, you don't sell a service, or do you have a business related to your trading?
No, nothing yet. It's just me, myself, and some friends, they ask, or I tell them, or one of the things is, if you will give me a moment to talk about it, is, women. I would like to educate as many women as possible in trading and taking care of their money, because, the most I've heard is, even in Silicon Valley, if you consider there are a lot of women, all highly educated engineers, computer engineers in big positions. When you ask about them stocks, what do you do with it, or what you're trading? Oh, my husband does it, or this and that. I'm like, you are with such a good degree, with an understanding of something. You run a team. Why can't you understand this?
Yeah.
Right.
Yeah.
So that was my
I've interviewed other women who have a similar mission, that they want to lift up women, educate people, educate women on trading. And, you know, you would think after what happened in 2000 and 2008 that they'd want to know how to be more self-directed instead of depending upon a salesman at a brokerage house.
Yeah, so at least just know the basic stuff of where stuff is, so you know you're not surprised or not dependent on someone. So use your power to, you know, in everything, not just one thing.
Yeah, and divorces happen, and you know, and you know what? And sometimes, you know, the woman. Well, most of the time, the woman will outlive the man. I'm not saying I know why, but it is a statistic. So then they're left really in a bind, not knowing what to do if they've been dependent. So you want to make them independent, not only of their husbands, but of everybody.
Yeah, just, you know, use your knowledge in the financials also. You know, be smart there. That's all.
Okay.
Not to overcome anything, but you know, you're doing everything else. Why not this too? Have some basic knowledge. That's
Well, you know what? Your husband was very fortunate too to meet someone like you, Nargis, in my opinion.
Oh, I tell him he's the luckiest man on earth.
You remind him? Okay.
I remind him every single time.
I tell you, I had a lot of fun. Didn't I say that we'd have some fun together? You enjoy yourself? You know, someone has said, where can I, what is the Twitter handle of this fine lady? So you could follow Nargis. Her Twitter handle is Nargis, Nargis 007. Why the 007? You fancy yourself as a secret agent?
No, actually.
Because that's what I think of. I think of James Bond when I hear 007.
Yes. I've read so many thrillers, and in my head, I'm a detective, like, you know, the Bond or those Perry Mason kinds. So I wanted to be a detective when I was growing up. And,
that's great.
So I thought, if not there, why not here? Like, you know, finding stuff, you know, being the detective here. So
that's a great metaphor, because you have to be one. You have to look under the surface. That's why I use RSI and not just price. You get messages from things that aren't on the surface, but underneath it. And from what I could tell, if I was to hire a detective, you'd be the first one I'd call, Nargis. So
thank you so much.
Really a pleasure meeting you. You know, I wish you a happy holiday season, happy New Year, and that pips rain down on you, and you and your family have a wonderful holiday, and that your trading continues to evolve, because, you know, we're either growing or dying, right, Nargis?
Yes, definitely. Yes, either you grow or you die.
Yeah, and it never stops. You know, someone said, you know, I'm still learning. I say, well, it never ends. So
yes, the day you stop learning, you're done.
Yeah, so I really am glad that we met, had a chance to have a conversation. So thank you very much, Nargis. You're now my trading warrior sister, and I encourage people to follow you on your Twitter account at Nargis, again, Nargis 007, the detective trader Nargis. Thank you so much.
Thank you so much. Thank you. I appreciate it. Yeah,
I had a great time. Thank you. You made my day. Thank you, Nargis. All right, everyone, that's going to be a wrap for Turnaround Tuesday. Good hunting the rest of the day. See you in private chat and the member chat or on Twitter. Adios, and remember, don't just count your pips, count your blessings. See everyone tomorrow.